Europe prides itself on controlling inflation, and the United States plans to lower interest rates. But are these measures truly enough to maintain stability? Analyzing the SHIB 500 and Bitcoin charts gives us reasons to stay optimistic. Inflation in the Eurozone finally seems to be under control, or at least that's what Mario Centeno, a member of the European Central Bank's Governing Council, claims. Centeno isn't just optimistic, he's confident inflation will converge toward the long-sought 2% in the coming months. But is this outlook really that encouraging? According to Centeno, inflation is stabilizing and might even fall slightly below 2%. However, this apparent calm may only be superficial. The recent, albeit modest, uptick in inflation is due to misleading comparisons. A year ago, energy prices plummeted, and now that they've leveled out, the growth appears smaller than it actually is. This statistical illusion could create a false sense of control that doesn't necessarily reflect the economic reality for European households. Additionally, the global context is far from stable. Centeno acknowledges significant risks, including escalating trade tensions with the United States, particularly under Donald Trump's upcoming term, and the economic crisis affecting Germany and France. These factors are not insignificant. In the United States, the latest CPI report has temporarily eased fears of inflation spiraling out of control. The December data showed a monthly increase of 0.4%, slightly higher than expected, but aligned with the annual rate of 2.9%, and a modest improvement in core inflation, which stood at 3.2%. However, these numbers are far from providing total relief. The Federal Reserve finds itself in a delicate position where any changes to interest rates must be carefully calculated. The CPI report has fueled expectations of possible interest rate cuts in February or March. But here's the key question: is it wise for the Fed to ease monetary policy when inflation is still hovering around 3%? Economists like Benjamin Schroeder and Petrovic Garvey from ING are clear on this point. While the report wasn't disastrous, it wasn't exactly reassuring either. The drop in the 10-year bond yield could create a false sense of stability. The Federal Reserve knows that any premature decision could be a costly mistake. David Page from AXA IM points out that disinflation in the housing sector contributed to the slight improvement in recent data, but he warns that seasonal adjustments in the first quarter could complicate the outlook. The Fed might choose to make a rate cut in March, followed by a prolonged pause. Alison Boxer from PIMCO agrees, emphasizing that it's safer for the Fed to wait for more data before making any moves. Jerome Powell will likely reinforce this cautious stance at the next meeting. The economic outlook in both the Eurozone and the United States remains fragile. In the Eurozone, the European Central Bank's optimism appears to rest on misleading statistical comparisons, while external risks, such as trade tensions and economic crises in Germany and France, could undermine any progress. Meanwhile, in the United States, inflation data has shown slight improvement, but inflation remains high, leaving the Fed with a difficult choice: cut rates too soon and risk re-knitting inflation, or hold steady and potentially stifle growth. Both scenarios highlight how delicate economic stability remains, and any rushed decisions could have serious consequences. Caution is essential, as is understanding the current state of the SHIB 500, combining fundamental analysis with technical analysis. After seeing news that might seem encouraging, some analysts in the global economic ecosystem remind us that not everything that glitters is gold. Here, we aim to analyze the situation through the lens of technical analysis. That's why we'll take a closer look at the SHIB 500, the US index. And of course, we'll analyze Bitcoin because our goal is to shed light in a world filled with noise. Now, let's dive into what we think about the SHIB 500 and Bitcoin. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
take a look at Bitcoin's daily chart. Since September 2022, or rather, October, you can clearly see how the SHIB 500 has been in a very challenging situation. What's the current situation with the SHIB 500? Let's take a look at Bitcoin's daily chart. Since September 2022, or rather October, it's been clear that the SHIB 500 is in a very challenging situation. However, since that time, we've seen a clear upward trend in this flagship American index. It's worth noting that this movement follows a market accumulation phase. After breaking the creek and performing a test with a false breakout, the price has done nothing but climb. We've also been analyzing the idea that we're experiencing an inverse complex corrective pattern. To put it simply, in such a pattern, there are typically 3 waves, and the third wave can be particularly aggressive. Its length is completely unpredictable. In the case of the SHIB 500, we're currently in the middle of this third wave, which we label as a Z wave. This is the phase we're seeing play out right now. As I mentioned earlier, The duration of this market phase within a complex corrective pattern is indeterminate. This means prices can continue climbing as long as certain structures are respected. In plain terms, what we need to focus on is identifying what signals to look for in the SHIB 500 chart to determine whether the optimistic news from public institutions holds any weight, or if, as global economists often warn, the situation could actually turn sour. So, who should we listen to? Honestly, we'd love to give you a definitive answer, but no one can predict the future with certainty. From a technical analysis perspective, and understanding how institutions manipulate prices as they see fit, often with insider knowledge of where the global economy is heading, it's prudent to speculate using technical insights. Now, let's focus on this. If we're in a perpetual climb within this wave, one of the key levels to watch is $5,735. As long as that structure remains intact and unbroken, the traditional market continues to look positive. In fact, I can even tell you that the market could break the structure, and we could still give it some margin before concluding that all is lost. However, the first control level we need to focus on, as I've mentioned, is the price level of $5,730 for the SHIB 500. Now, looking at Bitcoin on its daily time frame, both the SHIB 500 and Bitcoin have synchronized from a technical analysis perspective. We've been evaluating the idea of an inverse corrective pattern, and like the SHIB 500, Bitcoin is currently in the same Z wave. This suggests that the priority remains for the price to keep climbing, as long as we don't see certain behavior in its price action. So, let's talk about the movement you should watch for that could change this outlook. Just as I mentioned the key level for the SHIB 500, here's the key level for Bitcoin, $92,000. We've been tracking this level in previous videos, and as long as it holds, we can remain optimistic about Bitcoin and the broader crypto ecosystem without any major concerns. This is largely because of how smart money operates during this type of market phase, which we've studied extensively. That's why, for now, we should continue to approach the situation with a positive outlook. Now, let's zoom into a 4-hour time frame and look at a recent event we've discussed in previous videos and during our daily live streams. We were expecting to see a deceptive bearish climactic move, which has now occurred. Following this event, we needed to assess the possibility of a compression forming with a hidden trend line that was obscured by this earlier spike. This led us to consider, both then and now, that we had to believe in this breakout. Since the breakout, we've seen the price break through the creek, perform a test, and continue on its bullish path. All of this points to good news. As we've been analyzing, the volume and its behavior during these aggressive downward moves clearly show that large institutions were absorbing a significant amount of liquidity. In this case, since the moves were bearish, the speculation at the time was that they were absorbing sales. Now, looking at how things have developed, I think it's quite clear to everyone that this has been, and continues to be, an institutional maneuver. This supports the idea of maintaining a positive outlook, as we've explained. Take Bitcoin, for example. It's pulling away from that dangerous structure and continuing on its upward path. This doesn't mean the battle is won. It simply means we're grounding ourselves in reality, identifying the key levels we need to monitor, and avoiding the noise. Let's not get caught up in media chaos where some say A, others say B, and we end up confused at C. Instead, let's stay focused, develop our own perspective, and work with an independent opinion based on the behavior of large institutions. Let's avoid falling into fanatical thinking or ideological biases. If you found this advanced technical analysis interesting, let me know in the comments. Don't forget to like the video and subscribe to the channel so you don't miss future updates. And share this video with your friends and other cryptocurrency and trading communities. Good luck with your trading, and see you next time.